I realize, at least initially, right now, it's been taken as sort of a bullish move, at least on prices and what that's going to mean for supplies. But I also have to wonder if we're seeing these cuts, if it's potentially a harbinger, at least in the near term, of more potential economic pain, at least from the Saudi perspective.
Well, I think when you look at the motivation, there are the fundamental reasons that they cited, which is weak demand off of the back of the surge in infections. However, there are political motivations that weren't talked about. In particular, look at the detente in the Middle East with the recent overtures between Saudi Arabia and Qatar. There's real reasons they want to support bringing these groups back together. But I think more importantly than the motivation behind it is, what does this mean for fundamentals? One is it neutralizes any demand weakness in the first quarter. But second of all, it means it sets OPEC up to fall behind the curve as we go into second quarter. You get the vaccinations pushing jet demand up. They're now behind 3 million barrels per day, and they're going to be playing catch up over the course of third quarter. So this really does tee up for a much tighter market as we go into second and third quarter.
All right. So what does that mean for prices then, especially as we do go into the second quarter? Could we see a big spike in the price of oil?
We still maintain our $65 a barrel target. I want to emphasize that when you look at this market, not only what's happening in oil, but look at copper, gold, and the rest of the commodity complex, you have all the telltale signs of a commodity supercycle driven by this reflation feedback loop, meaning that weaker dollar putting upward pressure on oil and commodities, higher oil and commodity prices in turn lead to more global liquidity, which increases demand in the emerging markets, and it just cycles between dollar, oil, and emerging market growth. And you can see this feedback loop. It worked in the 2000s, worked in the 70s, and going back since November, it's been at play again, and that's reinforcing these higher prices we're seeing.
Hey, Jeff, talk about other commodities. LNG, I don't know if you can explain to our viewers what's going on there in terms of in Japan and just throughout Asia in demand, and whether or not that's also going to spark exports from the U.S. But I'd love to if you could explain it to us.
Yeah, for those who haven't followed this market, it just reached $21 an MMBTU. Again, my point, prices are back to super cycle levels across many of these different commodities. What's driving it are supply disruptions in the LNG supply chains, particularly with these big plants sitting in places like the Middle East. Then you combine that with lost supplies out of places like the United States. LNG supplies are not sufficient against very strong demand growth coming out of the Asia Pacific, particularly China.
Yeah, is that a benefit to the Cheniers of the world we're showing right now, and that others that have those huge terminals to export?
Well, they got to basically have that supply. The problem is some of them have supply off right now, so you got to pick and choose the ones that are producing right now.
Hey, Jeff, report from one of your colleagues on the street this week about Bitcoin and how it's competing with gold for flows. I just wondered if you're seeing dislocations in the assets you cover because of crypto.
No, we actually argue that gold and Bitcoin can coexist. In terms of thinking about how Bitcoin is trading, it's trading much like copper or any of the growth risk-on type assets. It's not trading like a defensive asset like gold. In fact, overlay a picture of Bitcoin and copper, they look strikingly similar. Now, I think when we think about gold, that pullback that we saw back in December, a lot of people thought it was stealing demand. No, if you look at the ETF holdings of gold, the decline was perfectly in line with that cyclical rotation driven by the vaccine news. And the more recent rally, has been brought in by people coming back into the ETF. And I think, this Georgia election is going to be a potential big driver of more demand for gold.
Shepard Smith here. Thanks for watching CNBC on YouTube.